Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Iran risks return. Oil surges after the United States says it intercepted a missile attack on its forces, stoking fears of a widening Middle East conflict. SK Hynix misses profit estimates, sending shares tumbling as investors question the longevity of the AI boom. And mining boom, the world's second largest miner posts surging profits and its highest interim dividend in 4 years. We hear exclusively from Rio Tinto CEO Simon Trott. It has just gone 8 a.m. across the Emirates. I'm Abir Abu Anwar in Dubai. Another packed show today, an escalation in the Middle East. But before we get into all of this, let's just take a quick look at where markets are this morning. Risk off when it comes to equities. S&P futures 0.3 lower this morning. Now the S&P 500 did gain yesterday. Memory chip stocks, including Micron, for example, were weighing on the overall gauge. We're seeing this tech rout really plaguing markets. The SOX gauge, which we've talked about multiple times on this show and other shows, is now only 56% higher year to date. We were talking a few months ago about it being 100%, over 100% higher for the year, but that seems to be taking a back seat now. Something else investors are keeping an eye on is the geopolitics. Iran, fresh attacks on U.S. bases in the region. We'll talk more about that in the show. And then Asian equity is 1.8% lower this morning. We saw the KOSPI seeing its trading halted for 20 minutes earlier in the morning. SK Hynix, despite over 500% higher profits for the quarter, investors don't seem excited about that. Winnie will talk to us in a second about why exactly that is. And then Brent crude, yet again in the green, once again 4% higher with those fresh attacks in the region. And then we're also keeping an eye on the yield of the 10-year notes in the United States. FOMC decision happening later today. What does the Federal Reserve decide to do? That's the question everyone is asking themselves today. We will wait and see. But for a look at what is happening in Asian equities this morning, we've got Winnie Su in our Hong Kong studio. Winnie, what do you have for us?
Yeah, good morning, Abir. Well, we are seeing Asian stocks extending declines for a second day, with the South Korea's KOSPI index here leading those losses. Here, as you just mentioned, KOSPI down more than 8%, which means that it has triggered that circuit breaker earlier today, with trading halted for about 20 minutes. And that is a back-to-back circuit breaker from yesterday as well. And we did see these circuit breakers also on the Nasdaq index. Now, major reasons of the losses are really coming through from SK Hynix, which is down 11% here, and that is because the earnings really missed the estimates. As you flip the board and take a look at where those earnings are really coming out, because the earnings in fact jumped about 557%. You can see profit jump here, and coming through at coming through at still missing estimate by about 6%. Now it is the miss on estimate, but the declines really extended after those earnings calls, where we heard very little about the details when it comes to the long-term contracts and also the shareholder returns. So that has been some disappointment for investors. Now, SK Hynix, with those declines really dragging down South Korea's KOSPI index, for the KOSPI to now headed for its worst month on record, and with those 30-something declines on the KOSPI index for July, it is also the worst performer so far this month among all global peers. Back to you, Abir.
Winnie Su in Hong Kong. What a reversal. The KOSPI was the best performing gauge in the year, and now we're seeing that performance. Thank you, as always, for your time. Now let's return to our top story this morning. Oil is surging after the U.S. said it intercepted an Iranian attack on military bases, ending a days-long pause in fighting and increasing the risk of a return to full-blown war in the region. U.S. Central Command says that along with Saudi forces, it retaliated with strikes on Iran-backed militants in Iraq. So let's unpack all this situation with Stuart Livingstone-Wallace, Bloomberg's executive editor for the Middle East, North Africa, and Russia. Stuart, another escalation. We saw a little bit of calmness since Friday when the U.S. stopped its attacks, but now this happens this morning. Could we see a return to this full-blown aggression in the region between the United States and Iran?
Yeah, I mean, it has to be on the table, doesn't it? That doesn't mean it's definitive or it will happen. We know there's reluctance, certainly from both sides. From the U.S. side, there's a question of how effective could it be if you continue with airstrikes. Airstrikes have very limited effectiveness in terms of long-term strategic objectives. And then from the Iranian side, clearly, look, there is a price to be paid. They can say the fact that they've survived gives them a degree of victory, as they would put it, but, it's a very painful victory for them. But I think what's interesting about this is that you're now starting to get these proxies a lot more engaged, particularly the Houthis. The militias in southern Iraq or eastern Iraq, they were engaged sporadically throughout this conflict, but it appears now to be escalated, particularly with those joint Saudi-US attacks on those positions in eastern Iraq. That's incredibly unusual, and we've been sort of dusting off the history books to see the last time that happened. We suspect, at least in terms of officially acknowledged attacks, this is probably for several decades.
Wow. And then, I mean, obviously this is happening very, very quickly yet again. But then when it comes to the Strait of Hormuz, and this is what markets are looking at, movement there is still paralyzed. The talks between Oman and Iran, where are those sitting now?
So, again, it seems to be this sort of endless back and forth about the proposals. We're not quite sure exactly what was proposed, but it seems like, well, whatever was proposed isn't really good enough. Certainly the Iranians have come out and said that, they've acknowledged the Omani proposals, but they kind of want fresh proposals. So, again, we'll see what that looks like. I think ultimately what Iran would like is total control over Hormuz. What it may settle for, I think, is the key question here.
Yeah. All right. Well, Stuart, thank you, as always, for your time this morning. Stuart Livingstone Wallace, Bloomberg's executive editor for the Middle East, North Africa, and Russia, with all those updates. Now, Israeli Prime Minister Benjamin Netanyahu earlier met with President Trump at the White House, with Trump seeking to lay the ground for further diplomacy in the conflict. Netanyahu later posted on Instagram that it was, quote, one of the best conversations I've had with Trump. We're now joined by Bloomberg's Dan Williams, who is in Washington. Dan, good to have you on this morning, just carrying the conversation that I was having with Stuart. This renewed aggression in the region comes at a time where Netanyahu is visiting the United States. So what can you tell us about what exactly went on, and beyond the headlines, what essentially is the conversation between Israel and the United States at the moment?
Well, thank you. And if you ask the Iranians, it's quite possible that this flare-up of the last 12 hours, which was very ably summarized by Stuart, was designed to follow on that meeting in Washington between Netanyahu and Trump, the Israeli Prime Minister, the US President, their first meeting since they went to war against Iran on February 28th, indeed on the 5-month mark of the beginning of that war. While both leaders spoke about a preference for a diplomatic solution, it's clear that their public closing of ranks also shows that they're ready to work together in the absence of such a solution, in an alternative situation. That's obviously code for a return to full-on warfare against Iran. It would appear the Iranians picked up on that code and are signaling in advance that they are not deterred.
And so, Dan, Israel has been quite quiet over the past month or so since these skirmishes between Iran and the United States have returned. What are the prospects, really, of Israel returning to the full-scale aggression that it started with the United States at the onstart of this war against Iran that we saw in late February?
That's a very good observation, Abir, and there's also a very simple reason why the Israelis have been quiet. They have not been part of this flare-up, this month's flare-up of fighting with Iran. That's been exclusively by U.S. forces, the U.S. Navy in the Gulf, and such. Essentially, the Israelis have said that they're willing to pitch in if and when the Americans request, or if and when they're directly attacked by the Iranians. Neither has happened. It would appear Iran is content to keep that regional power, Israel, out of this fight. It appears the Israelis are content with this unwritten subdivision of this conflict, whereby the Americans take on Iran and the Israelis take on Iran's proxy in Lebanon, Hezbollah. It's worth remembering just a few weeks ago, the Iranians were conditioning any diplomatic resolution on Lebanon being included, effectively a safeguard for what remains of Hezbollah in Lebanon, immunity for Hezbollah from continued Israeli attacks. Israel pushed back against this. There was a time when it caused tensions between Netanyahu and Trump. It would appear that the Israelis succeeded in divorcing the Lebanese front from the main Iranian front. That is the reason the Israelis have been quiet. That's the reason they have not been taking part, although the Israeli defense minister revealed only a few hours today at a conference that the Americans have been using bases in Israel to launch their attacks against Iran, among other bases in the region. So yes, there is a reason for that subdivision. Yeah. It's more than code. It's a subdivision of action.
All right, Bloomberg, Stan Williams in Washington, D.C. with that update. Thank you, as always. Ukrainian President Volodymyr Zelenskyy says he discussed Patriot air defenses and diplomatic efforts to end the Russian war during his White House meeting with President Trump. Zelenskyy described the talks as productive as Kyiv looks for ways to deter intensifying Russian missile and drone attacks. He says he also met with representatives from Lockheed Martin. Now, before we head into the break, just some breaking news. Earnings from Standard Chartered, second quarter pre-tax profit at $2.33 billion. The estimate was around 2.1, so a slight beat there. It also says that it revised its 2026 guidance and a $1 billion share buyback starting imminently. It also said that the second quarter credit impairment charge was at around 150 million. So those breaking lines from Standard Chartered following massive hauls, really, that we saw from banks on Wall Street earlier in the week. Now, coming up, Asian stocks are sliding as the rotation out of chip shares continues. South Korea's SK Hynix is at the epicenter after posting record earnings that still failed to live up to expectations. We'll discuss the outlook with Jeffrey Sexton of Demeter Tactical Investments. That is coming up next. This is Bloomberg. SK Hynix shares are on the slide in Seoul after it posted earnings that failed to match the market's steep expectations. Despite reporting a six-fold surge in quarterly profit and margins of 80%, investors seem to be focusing in on the $31 billion capital outlay, fueling fears about overinvestment in AI capacity. So let's go to Seoul now, and Bureau Editor Denny Thomas. Denny, we were just reporting on those numbers, over 500% surge in quarterly profit. What are investors not excited about, essentially, when it comes to SK Hynix?
Yeah, so first of all, it is a miss. They failed to meet the lofty expectations, so that's number one. Second, there's a pretty high and a record amount of spending they have outlined, about $31 billion. And then they failed to outline any much of a plan for shareholder return. So all combined has played a big role in today's big sell-off today. And there's always a bit of a nervousness around whether these stocks have run up too fast and whether the spending and the returns that these companies have been doing will pay off. Today's miss has primarily raised question marks about whether these profits are going to be stacking up against these investments.
And so, Denny, just the other thing is the capital outlays here, $31 billion that was reported. Those are the same fears that we're seeing in Wall Street. What do you think those Capex concerns mean for the rest of the market and some of SK Hynix's peers in South Korea?
Yeah, so tomorrow we have Samsung coming out with their earnings, and investors will be equally keen to see what kind of commentary, what kind of reiteration Samsung makes about the spending and plan. So that's going to be a key benchmark for anybody who is invested pretty much in this sector. The two-day collapse in the stock price of the tech in the chip companies in South Korea has had a big impact, and that's taken off a lot of the leverage that was in the market. And tomorrow, when Samsung reports, and the tone of that will definitely set whether what investors are going to be willing to take on the bet on the AI momentum going forward.
All right, Denny, we will have to leave it there. Tenny Thomas, our Seoul bureau editor. Now, carrying on with the story, the sell-off in tech is masking a rally in non-tech names. While the Nasdaq 100 heads into correction territory, the equal weight S&P 500 index has hit a fresh record. So joining us now to discuss all of this is Jeffrey Sexton, CEO of Demeter Tactical Investments. Jeffrey, good to have you on again.
Thank you for having me back.
Thank you. Well, you heard what was happening with SK Hynix. I'm looking at the stock now, about 16% lower, but this is really alluding to a wider market story now. If I remember correctly, the last time you were here, referring to the market or those moves as a beautiful red Ferrari heading down a hill without brakes. Is that still the narrative?
Yes, and it's not only going down the hill, it has finished its ride and it's crashed into the wall at the bottom of the hill. The brakes did not work. There were no brakes, as we all suspected. So the Philadelphia Semiconductor Index is in correction territory. Obviously, Korea has sold off 30% in 1 month. That's what happens when your car has no brakes. You crash.
So that is what's happening with tech. There's a lot of concern about Capex. Yeah. There's a lot of concern. We have earnings later today from some of the Max 7 reporting as well. So what are you looking for when it comes to those massive earnings, and what would that mean for the red Ferrari?
Well, there are other cars on the road besides Ferraris, as you alluded to, the equal weight index. Some of the other very boring cars are doing just fine. They're following the speed limit. They're doing what they're supposed to do. They're fine. It's the crazy driver on the highway, the semiconductors, the AI. They're the ones causing the problems right now. So what will be looked at in the earnings from Microsoft and Alphabet and all the rest, it's not how much are you making, how much are you spending. And they're going to be punished if they are spending too much money, i.e. if they're driving too fast. We heard Elon Musk say, we're going to spend as much Capex as we can possibly spend. Yeah, well, what has SpaceX done since I was here with you last? They were about to go public, and now they are also selling off. So the big spenders are getting hit big with losses right now. Those people who manage their businesses well, properly manage their money, and control their spending, those are the rest of the ones in the equal weight index, and they're doing just fine.
So outside of the metaphors, we're talking about those crazy rides, but we're also talking about the other names in the market that are doing just fine. What are those pockets of opportunities? Are you looking at financials? We broke Standard Chartered results. Other banks have been doing incredibly well in Wall Street. So is that possibly where the next leg is? Yes,
there are. You have to. The world is not one bubble waiting to pop. It is a series of rolling bubbles, and the trick is to be looking for the next wave, moving on to the next wave before the one you're currently in deflates. And the rest of the world economy, manufacturing, mining, we saw Rio Tinto, other sections of the world economy are functioning, they're doing fine. All the focus is on the bubble du jour, which is AI and tech spending, but the rest of the economy, they are making money. They go to work every day, they're digging things out of the ground, they're building things in their factories, people are spending money. So the economy in general, at least in the U.S., is actually much stronger than the headlines of AI bubbles would indicate.
So with that strong economy, what does that mean for the Fed later today? Citadel, yesterday we had a story saying that they're expecting a 25 basis point hike. Is that what Warsh decides to do?
Yeah, I don't like to give predictions. I will simply report what the market is pricing right now, and the market is overwhelmingly pricing that the Fed will remain on hold. And I think there are a couple of reasons for that. First, it's Warsh's first meeting. I'm not sure he wants to come out with a bang and cause problems with a rate hike. I also think, given the situation still percolating with Iran and Israel and the U.S., that there are too many factors, that there's a lot of wait and see. It's summer. You know, a lot of people are on holiday. Trading volumes are low. I think the market has probably correctly priced that there will be no hike today by the Fed. Now, that does not mean, though, as we get into the autumn, the bets and the arguments about whether there should be a hike become far louder. But I think that's obviously going to have a lot to do with where oil prices are. Especially, don't forget, we're heading into U.S. midterm elections, and some of our leaders tend to like to try to bribe the American public the closer it gets to election day. So a rate cut would get you more voters than a rate hike. Okay. So it'll be interesting to see.
And Jeffrey, just briefly, with the elephant in the room, the geopolitics flaring up yet again, did the market price this whole flare-up extremely wrong the first time around?
I think what we have found out is that Washington and Donald Trump are living in a world where you make someone an offer they can't refuse, and they refuse it. And then they don't know what to do when the person refuses it. And they say, well, you can't do that. It's like we're living in a Monty Python sketch. So the problem right now is that no one knows what to do next. And I mean people at the highest level. So where it ends is completely unclear. So it's not really fair to say the market got it wrong. They got it right for the day or two with the information they had. The information has changed, and now it's a constantly evolving situation. And so I'm not going to say the market got it wrong. I might say the politicians got it wrong.
Okay.
So it's a ping pong game right now.
All right.
And who knows where it ends?
All right, Jeffrey, ping pong game. Always a pleasure to have you on. Thank you for your time this morning. Jeffrey Sexton, Demeter, Tactical Investments CEO, with his thoughts on the markets. Now, coming up, more than 1,000 AI employees call for the government to help slow the pace of AI development following another OpenAI agent going rogue. We got the latest details on that. This is Bloomberg. An OpenAI agent that breached Hugging Face systems also compromised a customer at a second technology company, Modal Labs. Hugging Face says the agent broke into an isolated testing environment known as Sandbox that Modal was running for a customer. Modal's CTO says its own platform was not compromised, and OpenAI declined to comment. More than 1,000 employees across leading AI firms have signed a petition urging the U.S. government to support measures that could slow the pace of AI development. The letter, signed by workers at OpenAI, Anthropic, Google, and Meta, warns that AI may be advancing faster than humans can control. It calls for an international framework to manage the development of AI. Plenty more ahead. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Iran risks return. Oil surges after the U.S. says it intercepted a missile attack on its forces, stoking fears of a widening Middle East conflict. SK Hynix misses profit estimates, sending shares tumbling as investors question the longevity of the AI boom. And mining boom. The world's second largest miner posts surging profits and its highest interim dividend in 4 years. We hear exclusively from Rio Tinto CEO Simon Trott. It's just gone 8:30 a.m. across the Emirates. I'm Abir Abu Omar in Dubai. Let's take a quick look at where markets are sitting at 5:30. Still risk off more declines in Asian equities, but when it comes to U.S. futures, 0.3% lower as of now. Now, this follows a slightly positive performance in the S&P 500 yesterday, despite tech weighing on the overall gauge. We saw the likes of Micron, for example, memory chips, are really feeling the pain over the past couple of weeks or so. Micron was dropping, weighing on the overall performance. The SOX gauge, which gauges the performance of semiconductors, is about 60% higher year to date. It wasn't that long ago when we were talking about the SOX gauge being the best performer, being one of having its best year so far. Now it is set to have its worst month since 2002. So a quick quick turnaround. And then we're looking at Asian equities, 2.2% lower. The KOSPI was halted in its trading earlier in the morning. SK Hynix posting profits, 557% increase in its quarterly profits, but still a miss there, so investors not incredibly excited about that. And then Brent crude price is $87 on the barrel. Escalations in the Middle East, this is why we're seeing it in the green. Yield on the 10-year notes, 4.61%, not doing much, but we're still waiting for the FOMC later today. Now, just a quick flip at the board. We'll take a look at a sector that is not really getting discussed that much, and that is financials. This plugs the MSCI World Index against banks in different regions. And look, they're outperforming global equities. Tech has been the name of the game over the past few months or so, but banks are really outperforming global equities. We saw hauls in Wall Street and also in Europe. And so this is what banks are doing essentially against global equities. But for a deeper dive on what Asian equities are doing this morning, we've got Winnie Su in our Hong Kong studio. Winnie?
Yeah, good morning, Abir. Well, we are seeing Asian stocks extending declines further after having entered that technical correction territory just yesterday. Well, losses today are mainly being led by South Korea's KOSPI index. We see the gauge here down about 12.5%, and the level we're looking at is in fact 12.7%, which will make this an intraday low, intraday decline when it comes to the gauge. Now, you just mentioned it hit a circuit breaker, and it is also the very first time we saw this back-to-back circuit breaker from yesterday as well. So you can see that momentum really is unwinding very quickly after SK Hynix saw its earnings missed estimates. And we are seeing stocks down about 17%, which is also an intraday decline. Now, on the flip side, we are seeing a bit more positivity when it comes to tech stocks in Hong Kong, and those are being driven by the gains in the Chinese EV shares, which are gaining as some pressure easing around the memory chip prices. Now, when it comes to the Japanese market, I just also want to highlight that we are very closely monitoring that aftermath of the massive earthquake that we saw hit the country's Kyushu area, the Kumamoto prefecture, which is also a key place for chip making and manufacturers. So far we have confirmed about 13 people who have died from the earthquake, and still many to be rescued, and some suspension when it comes to some of the factories. We are seeing construction stocks, in fact, gaining on that front after that big explosion at the Aeon Mall. When it comes to cross-asset, we are looking at the Japanese yen here strengthening just a bit, but still very close to that 164 level against the dollar. We do have the Bank of Japan decision meeting coming up on Friday, and for now, still expecting a hold. Back to you, Abir.
All right, Winnie Su in Hong Kong with those market details. Now, some other breaking lines just breaking across the Bloomberg terminal. UBS this time, we're sticking with banks. UBS second quarter net income at $2.8 billion. The estimate was 2.47, around 2.5. And so another beat there. It also says that it plans to buy back additional shares of $3 billion by the second quarter of 2027. It also says that it's entering the third quarter with market conditions remaining broadly constructive. Now, I did not time the terminal chart we were showing just a few moments ago about banks outpacing global equities, but it does look like the picture is quite strong when it comes to lenders across different geographies, both in Europe, as we've seen by UBS and Standard Chartered, and also the ones on Wall Street. Now back to our top story this morning. The U.S. says it has intercepted several Iranian ballistic missiles on its military bases, breaking the brief pause in fighting in the Middle East. Meanwhile, the U.S. and Saudi forces launched attacks on Iran-backed militia targets in Iraq in response to the drones attacking Saudi's energy infrastructure. This comes as President Trump welcomed Israeli Prime Minister Benjamin Netanyahu to the White House amid strained relations between the two over the war in the Middle East. So joining us now to unpack all of this is Julia Roknifard, Senior Lecturer at the School of Law and Governance at Taylor's University, Malaysia. Julia, good to have you on this morning. Fresh attacks this morning in the Middle East that we saw by Iran on military bases, and then Saudi and the U.S. launching those mutual attacks on eastern parts of Iraq. Are we expected to see those re-escalations and then calmness in the geopolitical scene every now and then for the foreseeable future, do you think?
We just might, as you suggest, and I think as I've been suggesting since the ceasefire, that the aim possibly could be shifting what happened during the 40-day war into this low-intensity kind of simmering warfare in the region, simply due to the reason that there is not enough munitions, there's not enough weapons in order to sustain a high-intensity conflict that we observed in the first weeks of the war. And in fact, the reason to this pause of a couple-day pause, which was suggested by the initiative of the United States, the most likely reason to it is also that it has been running out of munitions. So again, the high-intensity warfare is unsustainable. This kind of outbreaks, until and unless a comprehensive deal is achieved, which right now seems highly unlikely, are said to continue.
Julia, I want to talk about the new fronts that have been opened over the past couple of weeks or so. Now, there's no doubt that Iran has been militarily weakened over the past 5 months or so, but its proxies in the region seem to have been reactivated now. How do you see its leverage through those proxies evolving over the coming period?
I think Iran has been using the so-called proxies or allied groups within the axis of resistance quite wisely, not getting into the conflicts unless it was necessary and until it was necessary, like in the case of Lebanon, or in the Lebanese Hezbollah, and also how we've seen the Houthis or Ansarullah in Yemen not stepping in until recently with a threat to, again, blockade the Bab el-Mandeb Strait and the access to the Red Sea. However, also, I think it should be added, despite the remarks by Donald Trump himself and Secretary of War Pete Hegseth, I do not think that Iran's capacity and production capacity of weapons in particular has been obliterated, as was stated on a few occasions, and it has been able and is still able, as we can see easily, to sustain the warfare, to fend off attacks, and even exercise the attacks like this one on Jordan, provided also the targeting information that it's likely has been receiving from the allies.
Yeah, and I want to get back to the military, the capabilities of Iran. But before that, we've been reporting on the Prime Minister of Israel, Benjamin Netanyahu, visiting D.C. Earlier yesterday to meet with President Trump. So outside of the headlines that we've been seeing out of that visit, what do you think he's trying to achieve being there? And what message is he trying to send to the United States?
Indeed, since the media were not let in on this 90-minute meeting behind the closed doors, we don't know much. But Benjamin Netanyahu has been lobbying this meeting for quite some time. And as I understand, President Trump had nothing to say to him in person. So the Lindsey Graham funeral served as a good occasion for the meeting of the two. And it was said that they discussed in particular, Iran's nuclear issue, and that Iran should not have nuclear weapons, and the possibility of also attacking facilities, some of the facilities which Israel claims that Iran is developing as a new enrichment site. I think not much indeed is going on. That's why there's nothing to report on, because Netanyahu, of course, would like the United States to keep pounding Iran without the need for Israel to be participating in it directly. So Iran does not retaliate against Israel, especially on the eve of the elections, and Israel being engaged elsewhere, which is Gaza and Lebanon as well. and the reluctance of Donald Trump to go full in, with the understanding that indeed the munitions are running low. And we are hearing the reports about it from the United States, from the experts and officials themselves, that the munitions are indeed low, so it will be unsustainable and something else needs to be done. So I think there is a collision between the two, and there's also a collision between the desire to go for an all-out warfare and the capacity to do so.
All right, Julia, we're going to have to leave it there. But thank you, as always, for your time and insights. Julia Roknifard, Senior Lecturer for the School of Law and Governance at Taylor's University, Malaysia. Now, Zambia's Kwacha is nearing parity with the South African rand, capping a remarkable turnaround. This is according to Citigroup. The Kwacha has appreciated almost 18% against the dollar this year, making it the second best performing currency tracked by Bloomberg. We've got our chief Africa correspondent, Jennifer Zapasaja, joining us now from Johannesburg to discuss this performance. And Jen, what has essentially sparked this turnaround in the currency?
Well, Abir, it has been quite a turnaround, as you were just saying there. We have seen about year to date almost 18% against the dollar this year, which is significant for the Kwacha. And really what we heard from Citigroup analysts is that a lot of this is underpinned by some of the strength that we've seen from copper prices. Zambia is Africa's second largest copper producer. And so this has, as Citigroup analysts say, provided a bit of a tailwind for the Kwacha. Not just that, we've also seen debt restructuring really help the country. This has been a priority for President Hichilema. And so part of that has factored into some of the strength of the Kwacha. And you were mentioning the rand there, which, you know, here in South Africa, we of course track where the rand is in terms of its comparison to other emerging markets. And the fact that we are actually seeing it undervalued, as a Citigroup analyst put it, against the Kwacha is very interesting. But he did say that a lot of this is because last week we did see the South African Reserve Bank decide to leave benchmark rates unchanged. And so again, a bit of strength for the Kwacha and a bit of optimism, I guess you could say, for President Hichilema as he heads into the election next month.
And how would this actually help him bid for the re-election next month? Like, what is he looking at?
Well, you know, he's already delivered quite sizable returns, or a number of economic returns and reforms that he had promised initially when he came into office. And so what we're hearing from analysts is that this is set to just, again, give him a bit of strength heading into this election. He is seeking a second five-year term. And I mentioned what we've seen already from the stability from debt restructuring. We've seen the bonds, Zambian bonds, that have returned for investors about 36%. And so just continuing to see strength from the Kwacha adds to what we saw from the Kwacha last year, which was 25% rally in 2025. So again, it's stability and strength for President Hichilema. The question is, will voters vote that way and see it as such?
All right, Jen, we're going to have to leave it there. Jennifer Zapasaja, our chief Africa correspondent in Johannesburg. Now, coming up, it's a big week in big tech as Microsoft, Meta, and Qualcomm prepare to report later today. We'll discuss what investors will be keeping a close eye on next. This is Bloomberg. It is a pivotal week for big tech investors as Microsoft, Meta, Qualcomm, and Apple all report earnings. Investors will be looking for evidence that AI spending by these companies is generating meaningful returns. So to discuss all of this, we're now joined by Farah Al-Bahrawi, who leads our coverage of EMEA equity markets, macro trends, and strategy. Farah, good to have you on this morning. Investors are looking at the results that are coming out later today. What exactly is the market keeping a close eye on?
Absolutely, Abir. So a lot of those names that you just mentioned, they're going to be in focus today. So Meta and Microsoft particularly, they're among the biggest AI spenders alongside Amazon and Alphabet. So in reality, Abir, patience is running low with the big tech companies. It's not enough just to beat estimates anymore. It's really all about that Capex spending. I heard you talking about SK Hynix. I think that's a perfect example. Really good results, but what's happening here is that investors are really punishing increased AI spending, and that's exactly what we're expecting from these big tech companies. Capex is essentially really driving the market right now, and what was really interesting was this note from SocGen yesterday saying that it's not EPS that's driving the hyperscalers shares anymore, it's CDS spreads. So they're saying that as long as these are getting wider, valuations will be pressured. Valuations are actually at the lowest since ChatGPT launched for these hyperscalers. Yeah, it's actually quite fascinating. So that's the one to watch. When those peak, then maybe that's a sign that free cash flow is finally going to get improving.
It's fascinating with SK Hynix. We live in a world where over 500% increase in quarterly profit still doesn't get investors excited. But talk to me a little bit about how the season has gone so far and what exactly the market, other than that, is looking at, and why we haven't seen any meaningful boosts really to the moves there.
Absolutely. So this season has been rather strong, but the difference between the first quarter and the second quarter, let me give you some numbers. At the start of the first quarter, we expected 12% earnings growth, and then we got 29% earnings growth. So there was such a big beat, but heading into this season, we're expecting 23. We're getting 27. So the market is really rewarding the expectations here. So but that's what happened last quarter. But this quarter, we're seeing positive surprises among the highest in quarters and actually in record, and it's still not being rewarded. That's because, again, expectations were so high. We'll see. Will these big tech companies change that? I'm not sure. We'll see.
All right, Farah, we're going to have to leave it there with, I know that there are some technical difficulties with your mic, but Farah El-Bahrawi, who leads our coverage of EMEA equity markets, macro trends, and strategy with the latest on those market moves. Now, stay with us. Plenty more is ahead. This is Bloomberg. Rio Tinto will cut costs and build cash by boosting productivity and selling non-core assets. This is after the group posted a jump in profit for the first half, driven by strong commodity prices. Rio Tinto CEO Simon Trott spoke exclusively to Bloomberg as results were announced. Take a listen.
Iron ore remains a really strong market for us. We've been talking for years about the maturation of China growth, and you're certainly seeing that come through. It's been far more resilient than I think market pundits had expected because of that underlying demand. And whilst construction in China has slowed, you've seen a real pickup in export-related steel demand, so secondary and tertiary products. And that's led to fairly robust and stable pricing outcomes in the market. We continue to engage with all market participants, including CMRG. And so, through the ordinary course of business, we renew those contracts, and that's the phase we're in at the moment.
You've talked about that market evolving, though, and obviously at the moment that the economy is in a K-shaped recovery, and the property sector, fixed asset investment, probably isn't going to come back unless they return to the old economic playbook. Do you see the plateauing going downwards? What sort of a sharper slowdown might you be envisioning?
We've certainly seen over a period of years that construction segment slowing down, and it makes up a relatively smaller portion of our book now compared to 5-10 years ago, whereas really one of the big drivers. And as I say, you've seen that demand being replaced by export-related, not necessarily steel exports of themselves, but related to the increase in manufacturing within China and those products flowing to the rest of the world. I think domestic supplies and scrap have probably been a bit less in terms of on the supply side than predictions, and so that's led to stronger pricing outcomes and pretty good cost support. Is probably the last point I'd make. Increases in raw materials, particularly energy, has meant that it's pretty well supported prices on the right-hand side of the cost curve.
Obviously, more strategically important going forward is the role of copper, right? And prices demand has held up pretty well this year. Beyond Oyu Tolgoi, where do we look next in terms of guaranteeing future demand?
So one of the things we outlined today is around 70% of the raw material cost of a data centre comes from the materials that we produce. So, aluminium, copper, lithium, as well as steel. And if you look forward, I mean, the spend next year on from hyperscalers, $1 trillion, and you convert that across, that's a lot of lithium, aluminium and copper. And so really excited about how we're positioned for the future. Fortunately, we've got Oyu Tolgoi, which is ramping up to the 500,000 tonnes of capacity. That ramp-up's proceeding according to plan, and really pleased with the way that asset continues to perform. Kennecott in the US, one of only 2 copper smelters, and then a big pipeline of growth beyond that.
That was Rio Tinto CEO Simon Trott speaking earlier on Bloomberg. Now for a look at some of the other stories that we're following today. Saudi Prince Al-Walid bin Talal Al Saud has acquired a 5% stake worth $130 million in electric vehicle manufacturer Lucid. The purchase was seen as a vote of confidence in the company after it dismissed rumors of an impending bankruptcy. Lucid shares in New York surged after the investment to their highest level since April. And Dubai's financial hub has reached over 10,000 active registered companies for the first time, despite a period of heightened uncertainty due to the Iran war. The DIFC reported a 30% increase in registrations over the past 12 months, with 2,300 new companies setting up in the hub. That is it for Horizons Middle East and Africa today. This is Bloomberg.